Hey guys, Foxy is Trading here, back with another crypto video for you guys, and we are back talking about Fetch AI. Now in today's video, we are pretty much just going to be going over market structure because on the Twitter there isn't too much news. They are doing a little documentary on CNBC, which is pretty cool, on a main TV station, right? So that is pretty cool. And then they say which is pretty interesting. Google created discoverability and trust for websites. We are creating the same foundations for agents, which is true. That's why I like Fetch, but obviously there's so much more with Fetch. But let's look at market structure for today. That is what the video will be on. So we are green across the board for the week, still up in price, up in market cap, up in volume quite a bit. So people are buying up. There is volume, and 85% bullish on the community sentiment. And we are pretty much on all of the big exchanges, right? So going into market structure, what did I talk about last week? Well, I said that we had this liquidity right here, and I wanted to see a sweep of that liquidity before we pushed to the upside, right? And that is what we got. However, we were not able to push any higher up. We were not able to form a higher high or a higher high from these highs on the daily time frame, right? We can see we are bottoming out over here, and most likely now we are going to go a little bit further down because of the market also being insanely red, right? So the question now is, where can we head to? Well, you want to look for liquidity. You want to look for zones that make sense. So where is the next liquidity? This is a little question and a little test I'm going to give you guys, because you guys have been watching my videos for a while now. So if this was previous liquidity and we swept liquidity, now where would it be? Well, it would be right here, right? Why? Because this is the lowest point that has swept previous liquidity and has pushed to the upside, right? So that is where price could be headed. Now we also have this very large daily imbalance in price, right? Daily fair value gap. So it could align with something like this, a sweep of liquidity here, followed by a push to the upside, right? So maybe something like this, and then eventually go to the upside. And then when we close above, take out this high and push even higher up. Now the market is kind of indecisive right now. Bitcoin has swept liquidity. I can show you guys that, right? So Bitcoin has swept this liquidity right over here, and now it is trading within this imbalance in price, and it's kind of unsure. Does it want to go up? Does it want to go down? It is in the middle, right? And I think this zone is very important, and this closure will be important. Now, I do not want to see a closure of Bitcoin below this area, because then we could be going further down, and that means further downside for Fetch. Now, yes, that could provide better buying opportunities for the altcoin season, but it is just annoying, and I know you guys are all annoyed also, because we want to start seeing some green. I feel like it's just been red after red after red, weeks, months, and there really is just not much going on that makes us happy, that makes us believe, right? But you have to stay believing. You cannot become too pessimistic. Stay calm. Fetch AI is going to do good things. We know AI is strong. AI is for the future. Crypto's here. Everybody calm down. Now, another thing I want to show you guys is no shade, absolutely no shade to Crypto Core, right? But this is what I saw on CoinMarketCap. This was his trade idea. And I want to tell you guys, do not trade like this. Why? Because there's no zones. Just because you follow a trend line and you draw this out does not mean anything, right? That's not how price works. That's not how price reacts to zones. There's no liquidity. There's no imbalance. There's no support. There's no resist. Like, this is not a way to trade. So yes, you can use it as a little bit of a help, right? So if we go, let's say on the daily, okay, I'm gonna take my trend line. I'm gonna go from this high to this high. Okay, so it follows this trend. I can see it tapped here. I can see it tapped there. We are going down, right? Okay, that is a cool little thing to use, but Do not be tricked into doing something like this and then saying, oh, we broke below it, right? It's going to be an expansion, or we broke below it, it's going to go further down, right? These are just drawing tools. They are not zones. They are not places of liquidity, right? So yes, you can use trend lines as a support, as a guide, right? Something like this. Okay, I can see maybe price will tap here, maybe price will tap here. If we get a closure above, maybe we can go up. Cool. But don't fully rely on it, and especially I would not take trades on it, because that's just not how price works, especially on a shorter time frame like on the 1 hour. Trend lines get broken all the time, right? So don't be using it too much. You want to understand zones, and you want to understand liquidity, support, resistance, things like that. That's where price likes to target, right? And you can see it constantly throughout the market. These zones are not random, right? You have an imbalance in price right here before price tests it and pushes to the downside. This is not a random zone. Then this becomes a high liquidity. So that is where price will most likely want to target in the future. That is how you draw out zones. That is how you understand where the price of the market can go. Okay. So what else can we have a look at for Fetch.ai? Possibly the RSI, which is another tool to get an understanding, but it is not an end all be all kind of thing. Oh, it is, let's say on the weekly, it's going to be, oh, we were oversold 100%. That means we're going to go up to the upside. Eventually, yes, we will be going to the upside, but the upside can also be, for example, here before we go back down, right? So you want to use these things as tools, as help, as indicators, because they are lagging indicators, right? They lag behind price. So it is always good to see, right? Have a look. Okay, it is a little bit oversold, so we could possibly start seeing some push to the upside soon. Okay, cool. That's just another indication of help of where price can go. So now you guys know my view, right? Where price could most definitely go. Now we did close above the fair value gap on the daily, right? So it would actually be nice if price went back above, retested it, and pushed higher up, right? Now, obviously, we can still go down to liquidity. It just kind of depends on how the market wants to play out. As of right now, we are kind of in a no man's land. So I would advise maybe not to buy here, not to scale in, wait possibly for a lower price or for a confirmation of these highs for a bullish trend to the upside. That would be my way of looking at the market, and hopefully we get some more upside potential in the near future, because obviously myself, you guys don't want to be seeing more red and more downside, because as of right now we are still bearish. Yes, we have formed, so we have this high right over here, right? A lower high from this high, and we have formed a higher high from that area. But that doesn't necessarily mean we are in a bullish trend yet, right? So let's just say we close the day like this, and tomorrow we close above here. Now we can start saying that we are in a bullish trend because we closed above this high and we have closed above these two highs. Then my conviction would be a lot stronger. Just forming one higher high does not necessarily mean we are now in a bullish trend, and that is how many people get faked out. So do not get faked out. We are still most likely looking bearish, and I would not be surprised if this liquidity gets swept. So if you guys enjoyed the video, make sure to leave a like. If you have any questions at all, questions, concerns, let me know in the comments. Hit the subscribe button because it really does mean a lot to me. Make sure you guys do your own research because I'm not a financial advisor, and I'll see everybody in the next video.